Good afternoon and welcome to the Monday Noontide. I'm Heidi Thompson, your host with Lifeguarding Legacies, your estate planning attorney, and I help people with wills and trusts make sure that what they've worked for goes to the people they love and the causes they care about. Today I'm very excited to welcome Richard Saine. He is a reverse mortgage specialist with VIP Mortgage, and he's here to tell us all kinds of exciting things that I'll just start off with saying this is not your parents' reverse mortgage, so don't tune out the show. Listen, because there are some very cool things that people can do now that can really come to the rescue for a lot of the people in my community. So tune in, and I'm excited to have Richard here. Richard, welcome to the show.
Well, thank you, Heidi. Thanks for allowing me to participate.
All right, so I'm just going to ask Richard, what drew you into mortgages and into reverse mortgages?
Well, I was in the financial planning business for over 40 years. I had my own firm. I was a registered investment advisor. What started me in it is learning about it many years ago. I was doing financial planning seminars regarding asset protection and various type of things. And so when I found out how the reverse mortgage worked, I used to refer people out to a firm in California. This was back in the 90s. And I kind of retired about 11 years ago. My wife and I have a couple other businesses. And then recently, I've just kind of missed dealing with people that were my clients before, which are primarily people my age. I'm 73, that need kind of financial planning advice without necessarily an insurance salesman in there. So I got involved in the mortgage business in the fall of last year. It had to be licensed now. So back 20 years ago, we didn't even have to be licensed to do that. So I wanted to get back in the seminar business and talk about reverse mortgages for people over 62, and then the COVID thing hit. And so we're not able to meet with groups of people now. So I'm just doing it individually. And there's some really positive aspects out of the way it works now that are different than the way it worked 15 years ago. So
let's talk about that. What were the things that used to scare people about reverse mortgages that are no longer true?
Well, number one, prior to 2017, if you had a wife or a spouse that was under 62, she couldn't stay in the house if the primary borrower was over 62 and had a reverse mortgage. So that was a real negative. The second thing is that originally the title would change of the house. Now the title still stays in your name or the name of your living trust. The title does not change. The third thing was a lot of financial advisors that would convince people to do a reverse mortgage, to pull money out and to put it in an annuity so that they could make a commission on an annuity. And that was really one of the major downsides. The people that were recommending these to people were not looking at the best interest of what I call us perennials, not seniors, because we just keep coming back every year.
I love it.
The other thing is that the programs now are so much different. These used to be kind of considered a loan of last resort. Now the FHA, what they call HICM programs, home equity conversion mortgages, the limits are $766,000. But we also have jumbo loans that go up to $4 million now that are not FHA products. They don't have mortgage insurance, things like that. So it's a different type of product where people can look at it more of a financial planning tool. My referrals come from financial advisors because when they understand this, it makes logical sense where people can utilize the $7 trillion that's in equity in their home to either create cash flow or to do other things with it. So, for example, I live in Paradise Valley, Arizona, where our average home price is over $6 million. And there are a lot of people that in these jumbo loans would like to keep their home, but need to do major remodeling. And they can pull $1 million, $2 million out of their house, and their house still goes to their family. There are no mortgage payments as long as they live, that typical type of thing. So what kind of questions, Heidi, did that bring up for you?
So I definitely get where people could benefit from taking cash out to live on in retirement. So that's fantastic, especially
Mhm.
if they've turned out, let's say the markets have taken a downturn and so their savings aren't what they thought they were. That
Mhm.
this might be another option for them if they've got some equity in a home. So I get that. But we've actually talked a little bit about some really specialty things, particularly if we're looking at like Paradise Valley. There's something they could do with a reverse equity loan that would almost create some asset protection advantages for them. Talk to me about that. That was different. I'd never heard anyone talk
Well,
about
see,
that before.
for example, when you have since the variable here is how long you're going to live, and these loans are guaranteed. The FHA HICM loans, for example, are guaranteed to you're 150 years old. So when you do a reverse mortgage loan on your house, let's say your house is worth 600 and your loan is 300, you're going to have two liens on your house. Your house is going to be liened really for 150% of the value. And the reason they do that is because they have no idea what the loan's going to be like, how long you're going to live. Um, Even with the interest rates now around 3%, they have to guarantee that you can reside and live in this house till you're 150. So the reason it's kind of creditor protected in this situation is it's pretty hard to put a lien behind a mortgage that's mortgaged for 150% of the value of the house. Okay, so it provides a lot of what we call asset protection in that area. Um, and then secondly is when you have the right to live in the house till you're 150, it would be very difficult for anyone to get any type of lien against your property for any amount of money because they have no idea how long you're going to live. That's kind of where that's at.
That makes sense. Wow. And that's something I've never heard anyone else mention. So for some families, this could be a way to really make their trust still be kind of an asset protection trust without
Well,
even,
a lot of my neighbors are doctors, and
yeah,
doctors are in high liability professions. So
yes.
you cannot carry enough insurance to cover the liability that we all have today in this litigious world.
Right. But being able to keep your primary residence safe an extra way is just fantastic.
Right. And then it allows people the option to to live at home when they need care. It's not a question of whether or not people are going to need long-term care. The question is, if you live long enough, you're going to not be able to do the things you can do today.
Right.
So it allows people to provide money to be able to buy like there are some single premium life insurance policies that have long-term care, which are very, very good. And also there's it provides you to have the income to where you can pay for caretakers to come in your home.
Oh, wow. All right. That could be tremendously helpful to a lot of seniors who are trying to figure out how they can keep their home and still pay all their medical. That would be a great option for that.
Right,
Fantastic.
exactly. I mean, and long-term care is one of the things that we did many years years ago for clients. I was one of my group of representatives I had. We did a lot of long-term care coverage because long-term care was one of the things it's it protects money. It protects your legacy for your children. It protects your heritage because when you start looking at $5, $6, $8,000 a month for care to go into a care home. My dad was in a group home. He just passed away last year at 95. It was costing over $5,000 a month, and his money was gone. I was paying for half of it out of pocket, and no one wants to leave a situation for their children where they have to pay for their parents' care.
Right. That's no, that's absolutely right. Fantastic. All right. So I do remember way back in the day when we first started hearing about reverse mortgages, you would hear about people actually losing their homes. And I know
Correct.
they fixed that, so that just doesn't happen. But there are a couple things people have to know, right?
Yes, and see, one of the reasons that happened because there was no credit underwriting at all then. And what happened is there were people that were doing reverse mortgages that couldn't afford to pay their taxes even. And regardless of how you own your home, if you don't pay your taxes and your insurance or your taxes, you're going to lose your house.
Right.
Whether you own it free and clear, whatever, the county is going to take it. And so you have to have the ability to pay your taxes and insurance. So now the credit underwriting is there. It's not as stringent as a forward mortgage where you have to make payments because there are no payments due, but you have to have the ability to pay your taxes and insurance.
And homeowners.
Yes, and your homeowner's insurance. That's correct.
Yeah. So as long as you take care of those things and you make sure those are in the budget, you can really live very comfortably in your home without any real fear.
That's correct.
That's
That's correct.
fabulous.
So basically, you can live in your house as long as you live. The only requirement is you can't rent it out. You have to live in your house. If you leave your home for more than 6 months permanently to go in a group home or whatever, then your family or your successor trustee is going to have to sell the house because it can't be used. It's not available to anybody else to use. And it's got to be your primary residence.
That makes sense. And another thing that I think was a common misunderstanding from back in the day is that the bank owns the home when you
Correct.
die. And that's
Correct.
not true.
Not true. It's still in your trust. I mean, basically, in general, your heirs have up to a year to sell the house. They put it on the market, keep what equity's left. Now, and here's the other good thing. See, your house is your only security for the loan, which means that if we went through another debacle like 2009, 11, where your house was worth half and you were to die, your children are not responsible for negative equity.
So worst case scenario, you sell the house, it pays off the lien, or they write off the rest of the lien, and your kids aren't out anything. Best case scenario, you're still leaving good equity to your kids because we're still in an appreciating market.
Right.
Right.
And one of the things I talked about in my seminars, which is really important to think about, this $7 trillion that's in equity, is that the equity in your home has what I call no rate of return. In other words, if you and I have a $500,000 house, they're both going to appreciate in value regardless of how much you owe. So if a person with a free and clear loan, if your property goes up 5%, you're going to earn 5%. If you have a loan of $400,000 on your house, your property, if it goes up 5,000, then your rate of return is going to be 5,000 on the 100,000 that you have in of equity. You see what I mean? So equity itself has no rate of return, and that's a very difficult concept sometimes for people to get a handle on, because it used to be that people would think, well, I want to leave my house to my kids. Well, your kids aren't going to move in your house, number one. It's the money that's in the house. It's the equity that they want to have, and they still have equity in the house.
You're absolutely right. I can tell you, I'm learning in estate planning, there's still a certain subset of the population that really want their kids to have their house. And it's a frequent conversation. Talk to your kids about that.
Mm-hmm.
Do they actually want to move in? And almost never do the kids have the intention of living in mom and dad's house. They'd rather take that equity and apply it toward the lives they're building wherever that is.
That's
So
right.
now I'm sure there are some family homes on the East Coast where that's not true, where it's generational, but generally speaking here in Phoenix, I haven't seen it yet.
Well, for many people, their kids have a bigger house than they do.
Oh, that's true too.
Yeah, so it's really not the house that they want to leave to their kids. It's the equity and the money that's in their home. So
Right.
in theory, why not take part? If you wanted to give your money to your kids, why not give them some while they're alive? Why not take $1 million out of a $2 million house, give the $1 million to your kids while you're alive, as long as you can live in the house and you can watch them enjoy it. Why wait till you die?
Well, and I can give you some reasons on that one. You know, that would be a pretty heavy tax hit to give that large of a gift during life, where it wouldn't take that hit when you die. But you know, you could give them $15,000 a year tax free without it being
Sure.
an issue. So
Well, we'll use up part of your unified credit, and since the unified credit now is huge, it really
huge.
doesn't make a lot of difference. So, but
Yeah.
anyhow, it's whatever people are most comfortable with. I mean,
Sure.
you want to give money to your kids while you're alive, or give it to them after you die. I mean, at least
Yeah.
you can watch them enjoy it. So whether
Exactly.
it's 15,000 or 20,000 or 50,000, whatever the number is, it depends on the feeling of the person.
And I would say even another idea to do with that is take vacations with your kids. Take them somewhere and create those memories that you can't, you know, use that equity in your home and go travel with your kids and make
That's
those
beautiful
memories that they'll
because
never forget. Yeah.
Because, you know, the reality is, Heidi, we own nothing in this world. We're just renting it.
Right.
I mean,
Right.
the reality is it's all goes away. There's no pockets on caskets. So why hold on to something? Why not enjoy life? Like you say, take a vacation, take your kids, watch your kids enjoy their money. I mean, there's all kinds of reasons why people should do this. You know, some of the people I do it for are really kind of like last week, a couple ladies that just needed the income. They were living on $1,700 a month.
Ooh,
I mean, that's pretty hard to live, especially when you have taxes to pay and you have maybe a small house payment or a second mortgage or something like that. And
right.
so when you can give it somebody an extra $1,500 a month, it changes their life for a lot of people.
Oh, absolutely. Absolutely. I mean, I think about what would be different if we didn't have a mortgage to pay every month. That's a
Yeah,
remarkable
you
thought.
just need to
So
get older, Heidi.
I know, I know. Well, absolutely. Although I'm enjoying that being being a grandparent and still being able to get out and enjoy at this age is pretty amazing, I have to say.
I tell
All
you, at
right. Well,
73, I'm just I'm looking at life and I'm in the short end of the thing here. But you know, you experience a lot of things in your life, and we're all blessed to even be here. And
that's
if we're
right.
not in the obituaries today, it's a very good day.
It's a day above ground. We're happy to be here. You got it.
That's correct.
Well, Richard, hey, I appreciate that. This is good information for people. I think there are so many people afraid of reverse mortgages based on really old, outdated information that's not accurate anymore. I think it's a great job you're doing trying to get the word communicated on how these can really help people. And I'm just glad to know you and glad to be a part of getting your message out. So
Okay, and if
I think
is there a way that I can leave my phone number in case
I
anybody
was
wants
just
to
going to
know?
ask, how would people reach you if they want to get in touch with you? So what's your phone number?
It's 602-339-0579.
Perfect. And what's a good email?
My email is Richard Saine, RICHARDSAINE at VIPMTGINC.com.
Got it. Thank you so much, Richard. I appreciate it. That's all the time we have today. So I look forward to our further conversations and to workshops when the world opens back up for us again. In
Heidi,
the
and I
meantime,
love you. Any trust business. I mean, to me, everybody should have a living trust that owns property. So
well, I
um,
agree with you.
certainly want to work with you further.
Thank you, Richard. I appreciate it. Well, I am Heidi Thompson with Lifeguarding Legacies. This has been your Monday Noontide episode. Next week, we get to feature my friend Kimberly Mitchell. She has a Home with Help agency, so she can serve a lot of those clients we were just talking about with Richard, with the extra things that they need around their house and personal services and non-medical home care. And I'm looking forward to sharing her message as well next week. Uh, Tune in every Monday at noon, and I'm Heidi Thompson, your lifeguard legacy, uh, your legacy lifeguard. Let's get that straight. And my job again is to take your wills and trusts and make sure that those are working for you, taking everything you've worked for to make sure it's secured for your family for generations to come. Thanks so much and have a great week.
Thank you, Heidi.
Thank you.